All right, what is good for the culture family? So we got NFP news dropping in a short second. So we are going to be taking a look at the EUR USD markets. And after the NFP release, I'll break down the trade that we actually took yesterday um, during the Asian session. So give me 1 second here. We have NFP news being released in 2 minutes. So let's go ahead and see if we can't hop to EUR USD real quick. Let's take a look at what's happening on EUR USD. Gonna remove all of our drawings. Currently, the 4-hour candle appears to be bearish, but you can see that this current 4-hour candle has no top wick. It likely retested into a level of demand. It hasn't retested quite yet into a key level of demand on the 1-hour time frame. But you do see that price is in fact moving bullish, coming off of a bullish previous daily. You see the previous daily is bullish. We are at a resistance level, but price did break the previous daily high. But you just got to wait until to see what the news gives you, because the news will add volume to the markets. Right now, it's looking like it's going to be some bullish volume that we could potentially be seeing here for NFP, but we just have to wait. Now, we don't want to trade NFP, and actually, the way this is looking, we could be seeing a steeper move to the downside, but we don't want to trade the volume from NFP. We actually only want to trade the volume following NFP. So we will be looking to do that. So a little bit earlier, we're a little bit early on the session today, specifically so that we can watch the spike of this news that comes out in the next 17 seconds. And these are generally high impacting, high volume spikes. And then we'll take a look at what the numbers are for NFP, and we'll go from there. So we got 6 seconds here. Let's take a look what's going to happen. And boom, we get that bearish move there. Bearish move. We are at resistance on the larger time frame, so we're starting to get that bearish move. Oh, a smooth wick rejection, and now a continuation to the downside. So this is a good sign, and this is reversing off of this key level here. So that's what we're seeing. So we're seeing, a little bit of mixed volume, but initially the first initial spike was to the downside. Tapped in to a demand zone and didn't break this demand zone. So we got ourselves a little bit of a liquidity grab here. Let's dial down to the smaller time frame so you can take a look here. Price came down to a key level of demand, and then from that level, key level of demand, bought right back up. Gold is likely going to push to ATH right now. ATH being all-time highs. The all-time high is in fact up here. But gold is at a resistance level that we've seen in the past on the 4-hour time frame, has rejected off of nearly every single time that it's tapped into this level here. So it'll be interesting to see how price reacts off of that. We've just gotten a liquidity grab, or not a liquidity grab, but a corrective structure. You can see on EUR USD, price pushed into this level of demand here after. And why is this our key level of demand? Same thing. And we talk about this all the time. We've been talking about it all week, but in terms of volume, price reacts to structure. So volume, the high impact in news, it doesn't change the structure, it just adds volume to the already structure. So what would this have looked like on a normal day is that push down to this demand zone, you see the bullish candle close, and then you start to see that continuation following the previous daily bullish candle there. So you can see that price is, and if we zoom out here on the larger time frame, you can see that we are in a bullish trend here. So what we'll be looking for is to capitalize on a continuation play of these buys for NFP. And what we do here is you got to wait for a corrective structure to form on the smaller time frame. So we're not going to trade the spike. We never trade the spike, but we always wait for a corrective structure to form after the spike, and then to scale in on the continuation of that move there. It'll be reduced risk since this is a higher volume day that we'll be looking to take our entry on. So we'll have to wait for the flip. So price will come down, it'll form some type of resistance on a smaller time frame, and then we could likely get that continuation there. Price did in fact close bullish, and realistically, if we can get a pullback all the way down to this level here, that would be divine. That would be really nice. We can see price continue pushing up from there. I'll look for probably about a somewhere between a 10 and 20 pip stop loss, depending on how the candles close. Excuse me. Depending on how the candles close at this area. So if you take a look on the 1 minute time frame, you can see that corrective structure is beginning to start. If I'm going to do a 10 pip stop loss, I need a 10 lot. So I'm taking a look here at, let me go to FX calendar or position size calculator real quick. I'm going to calculate our position size. So 200,000 is the account. Risk ratio 0.5%. 0.5%, and then stop loss in pips. Let's just go 10 pips. Calculate from there. So a 10 lot, and then 20 pips would be like a 5 lot. So we'll go from there. All right. So we want to see that continuation play. See how this current 1 minute candle closes. Because I might just go ahead and scale into my position here after this 1 minute candle close, anticipating price to close bullish with this volume. So let me go ahead and get my trade set up. So 10, I'm going to have a 10 lot. We're going to look for a buy, and we're going to set our stop loss 10 pips here at stop loss 1.11233. I'm going to go ahead and send this order. So now we're in on buy positions here for this continuation move. So I want to see this continuation move take out this high. That'll be a great trade there, and we can see price continue pushing in our favor. So my actual entry, let's take a look here at my position. And this is how we trade every NFP or any high volume news. This is how I go about it every single time. So let's see, my actual entry is at 1.11327. So 1.11327. See if we can't get it there. We'll put it at 3.8 for the sake of, for the sake of it. So all I wanted to see now is that continuation of that volume for price to continue pushing up. We'll look to take profits back at this high up here. Running about a 1.5 risk to reward currently. Price is starting to give us that volume there. And this is a trade that can likely run long. So what I'm going to do is I'm going to go ahead and move my stops to break even here. Take the risk off of this trade. Make this completely a risk-free trade. 1.1. I'm going to put my stop loss at entry. 1.112. What was my entry? 2. What's the entry? 1.11327. So 1.11327. 1.11327. Modify. All right, so stops is roughly at break, or not roughly, but stops is at break even now. And we are running a little over a 1-to-1 risk to reward on this trade. Like I said, just wanted to see this candle flip and fill following that high volume from the news there. So we're going to go ahead and I think I am going to go ahead here after this candle. Yeah, so we're going to go ahead and close a portion of this position. I'm going to close about 9 lots there. There we go. All right, so we closed 90% at a 1-to-1, just getting in on that high volume, and I got stops moved to break even if price, and why I took my profit, 90% of the profit at this level here is because this is a level of demand, though it's likely on the larger time frame price, or level of supply, though it's likely on the larger time frame that price continues pushing bullish. I don't want to necessarily be in for that full move, so I'm gonna go ahead and Excuse me, let me rephrase that. Since this is a level of supply, price could reverse off of this level here, even though it's likely that on a larger time frame we continue pushing bullish throughout the rest of this session and potentially throughout the rest of this day. But what I want to do is I got stops to break even here, so we can let this trade now run to wherever we want it to go. We secured 90% at that 1-to-1 risk to reward, a little over 1-to-1 risk to reward. Is where I went ahead and secured my profits. And now we're just going to hold and see if we can't get this current 5-minute candle to not come back down to our entry level, but to continue pushing, break the previous high, and continue going up. If we get taken out for the rest of our position at break even, so be it. It's still likely that even if we do get taken out at BE, that price will go and continue pushing bullish. But, you know, that trade took all of 2 minutes, so not a bad trade. Let's go to my account here, order history. Let's see if I can pull it up. So yeah, so made about a 1% on there, and the runner just got taken out at break even. So we made a 1% very, very quickly on this continuation, anticipation of a continuation. And what we could be seeing here is a correction. Remember how I said I wanted to see price come back down to retest this level here? We could potentially see that retest and then that continuation up, because we have just so much volume here. And the difference between the structure is if price breaks through this low here on that high impact or high volume push to the downside, then we end up getting a change of character. But price didn't come to this level. It pushed down in a liquidity grab, high volume spike to the downside, but it respected off of our demand zone there based on, I believe it was the 30-minute time frame. Yeah. So based on the 30-minute time frame, and you can see how price reacted from this level here. And you can see on the smaller time frame how price is reacting currently. It created a double bottom right here. So we could still see that steeper move to the downside, but it's likely, being that this current 4-hour candle that closes in 19 minutes, if it closes bullish, the next 4-hour candle, which we could potentially take another trade with at a reduced risk, would continue pushing bullish. You'll likely see a fill of this wick to the upside and price continue pushing bullish. So that's what I would anticipate. But early on, we caught a quick trade. It was very, very fast. We set it up, though, was able to catch that following that volume from the news. And like I said, we're not trying to, be superstars in the market. Or I didn't say this, but we're not trying to be superstars in the market. We really just want to had like a 10 pip stop loss, secured at a little over a 1-to-1 risk to reward on that trade there. We got into this demand zone, price or supply zone. Price reacted off of it, started to form bearish, wanted to get on out of there. But it's likely that this 4-hour candle closes bullish, and then we see the bottom wick for the next 4-hour candle. So how would this look in terms of if price does not go right here, right? So we have a corrective structure. So we have our impulsive move up. Then we have our corrective structure right here. We can have a corrective structure down. Let's say the 4-hour candle closes bullish, but at this level here. What would we see happen? Likely a correction, a steeper move to the downside. This move to the downside would be the bottom wick of the new 4-hour candle. And then you see your continuation up. Price doesn't have to go all the way back down here because we have so much volume. But that's what I would likely anticipate for gold. I mean, for EURUSD, going forward. But we were able to capitalize, like I said, on a quick 1-to-1 risk to reward trade. Ended up making about $1,000 on that trade right there, all in a matter of 1, 2, really like 2 minutes, 3 minutes, I guess you can say. Just capitalizing on that volume following the news. And look at ourselves now. We're getting this demand zone. It's likely that price comes and breaks through this low. Why is it likely that price breaks through this low? It's because we have a double bottom here. And if you look really, really closely, it actually broke this low. So what is that considered based on what we know to be If price was going to go up, this is essentially a sign of a potential change of character. And we know that on the larger time frame, this is really our retest level. So if we dial it up to the larger time frame here, you can see that this is a retest level, but price has 17 minutes before it likely closes bullish. And if it closes bullish, the volume following the next 4 hour, or the volume following this 4 hour candle, the next 4 hour candle will likely fill this wick, and we'll start to see a continuation of that bullish run. Similar to what you see happening on gold here. Gold is at that actual retest level. So price pushed up immensely. Well, it came down to a key level of demand, right? Pushed up immensely, broke that high. This becomes now your key low. We have a lot of volume, and we talked about this all week this week. When you have a lot of volume, you can get your retest play. And so we have two different types of entries. We have our demand play and our retest play. So what we're seeing now is that retest play likely forming out, or panning out, shall I say, here for gold. You can see it retested the level that it had broken out of. High volume, moved to the upside, started to form a change of character and show signs to the downside, but it's likely that we don't have enough volume. Well, I mean, we have 16 minutes, so a lot can happen in 16 minutes. But if this candle closes bullish, then there's a good chance that we could see a continuation up. If it closes bearish, then we could start to see gold drop from this level, which has been a key reversal level for gold here. Every time tapping into this level, rejecting off of this area. You can see how it's rejecting off of the area now. Let's take a look at EURUSD. EURUSD is breaking out of a key resistance level. I mean, EU on the larger time frame just has been bullish, so we can't negate the fact that EU has been bullish. We got to a key retest level, which is here. Price came down here. This is on the daily time frame, and then from this level we started to see that bullish structure begin to show itself. Where are we at now? Price came to a key level of resistance. This is a key level of resistance here. And this is a daily order block, I guess you can call it, or a supply zone, whatever you want to call it. Just understanding that there's resistance at this level. Price tapped into that level. You get your corrective structure. You start to see your resistance. If the 4 hour candle can close bullish, you will likely see that continued bullish push. If not, then you go from there. But the way that this their previous 15-minute candle close, we could start to see, even if this 4 hour or 15-minute candle closes bearish the way it is, that next 4 hour candle will start. We'll likely see a correction, price to form a retest, and then that continuation. And truthfully, since we've already taken my one trade on the day, it was a quick trade, very, very fast, all of 3 minutes. We talked about it beforehand. So we talked about we wanted to see this impulsive move to the upside. We got the impulsive move, and then we wanted to wait for a corrective structure and then get in on the potential continuation of the volume. I went ahead and took profits at this small demand zone. It literally was a quick trade, but sometimes with these high volume news events, that's what you get. So we were able to capitalize on that move. And if you're not anticipating, so there's 3 stages of becoming an ace trader. An ace trader is the model that, I live by and that I want to instill in everybody when you're a part of For the Culture FX. An ace trader is anticipate. So if we don't anticipate, which is the first letter of becoming an ace trader, and an ace trader doesn't mean that you get every trade right. That's not what an ace trader means. An ace trader means that you did everything that you were supposed to do correctly. The markets are going to be the market. So as long as you buy by the system correctly, then this is how you become. How you become an ace trader. So this was essentially an anticipation. So you wait for the anticipation. That's the A. Then C is your confirmation. The confirmation is this 1 minute bullish candle to close. So though it didn't retest, we had a lot of volume. 1 minute bullish candle close, you could likely start to see some volume coming off of that. What do we see happen then? Price reached the demand. Well, ace trader, anticipation, confirmation, and finally execution. So we seen our candle starting to close bullish. We wanted to go ahead and take our entry. I had did a conservative 10 pip stop loss because I didn't want any no muss, no fuss, no coconuts. My entry was at 32.27, so like slightly above this, but within this area. You get the point. And then, at a little bit over, you can see we was running about a 1.5 risk to reward. And at that 1-to-1, when price started to pull back on this bearish candle, we went ahead and just, all right, let's go ahead and get out. Why? Because price, for one, hasn't reached our retest level. So this was an impulsive trade based off of, and not impulsive as in it didn't abide by our strategy, but an impulsive trade as in you got to get in quick and execute quick based off of the high volume. And what did we start to see? We got to change the character here. This candle, you can't tell, but it broke through this low. If you zoom in, so we take a look there. You can see that this low got broken here. That's a sign of the change of character and that we are in fact getting this correction, likely to that retest zone where we could potentially see a flipping and continuation. So little things like this, and as you start to look at the markets more and more, you start to understand these different things. You'll start to be on the lookout for certain moves like this and anticipating these things. So let's go ahead. I'm gonna set an alert at this level here so I can be notified just for when price gets to this level. Create that. All right, but let's break down the trade that I actually took yesterday. Similar to the trade that we took today, it was a quick trade. So where was I at? Oh, that's 1 a.m. No. 15, 18. I needed to be at 21. Oh, okay. So this was the market structure. So we're going to do the bar by bar replay. We're going to break this down. So this is what I was looking at going into the Asian session last night. Now, it's important to know that the previous candle on the 4-hour time frame, we take a look at the 4-hour time frame, had just closed bullish. So you can see that the 4-hour time frame candle closed bullish. So I'm looking for buys. We dial down back to our smaller time frame. You can see that price, so that candle closed bullish at, this was the candle. All right, so this was the start of the new 4-hour candle. So understanding that this was the start of the new 4-hour candle, that 4-hour candle, previous 4-hour candle closed bullish. So we're expecting buys. The start of the 4-hour candle, this is the bottom wick. What did I want to see? I wanted to see price come down to this level here. I think it was on the 1-minute time frame. Yeah, to this level here. And I wanted to see essentially a bullish reaction from this level. I think I took my entry here. Let me just not quote you guys wrong. Let me see so that I can, because I know that I took my entry as this 1-minute candle was forming, but it was actually, I know my entry. It was 1111111. Yep, there it is. So I was taking it. I actually took my entry like within this area, but spreads. This is only a 1 pip stop loss, and I had roughly my stop loss was at 93. There we go. And I wanted to see price continue to push to break for this high, and then I have this resistance here. If we take a look on the larger time frame, it's still set up from last night, but we had resistance at this level here, which is where I wanted to go. So I wanted to target potentially this high, and then or this level here. So what did I start to see happen? Well, one thing that about me and the trades that I take during the Asian session is I'm not looking to hold the trade long. I have to go to sleep at 10 o'clock. So we're talking, I'm looking at an entry at like 9:10 is my entry. So I don't want to be in longer than I have to be. And this is my overall target. So what happened? Price began to push down. We started to get some volume in our direction. I sent this to the group. We got a correction, a continuation. Now, when we started to move like this, we started to get about a 1-to-1 risk to reward. I moved stops to break even. And then let me see here if it'll show me. Okay, price pushed up like that. Getting good volume, good volume. I moved stops to break even, risk-free trade. And then we had this candle close bearish. Once this candle closed bearish at this demand zone, I was like, all right, let's go ahead and just take this profit. The trade lasted all of, I want to say it was like 15 minutes. Yeah, you can see this 15-minute candle there. So the trade was all of not even necessarily 15 minutes, but you're talking about from entry to exit point within that 15-minute candle, or is where we got our entry, took our profit, and then exited the position. And then after that, I closed at about a little over a 1-to-1 risk to reward. My stop loss was, well, let me rephrase that. My stop loss was under this level, so it was a little over a 1-to-1 risk to reward. So a 1-to-1.5 risk to reward, and let me tell you my actual exit point. EU just hit our retest location. I got it up on this screen here, so we won't miss that. If and when price does flip here, you definitely want to wait for the 4-hour candle to close. So at least for the next, 5 minutes or 7 minutes, we wouldn't even be looking to take an entry anyway, because you need that 4-hour candle to close bullish to be able to scale into the next 4-hour candle bottom wick, and then the continuation to fill the wick of the 4-hour candle that had just previously formed. But so let me see here. My take profit, target profit. Let's see, 1.11233, 1.11. I think that's where I moved my stop loss to 1.21. Wait, what is it at? Oh, 233. Okay, so that's where I got out at. So 1.11. Wait, hold on. 1.11. There's no way. 1.1127. So this is where I got out at. It is 1.1130. So 1.1130. So that's where I had took my profits after price started to show signs of rejection. I went ahead and took profits there. I only took that trade at $500 risk, so I made $500 profit at the 1-to-1, and just called it a day, for that session. Now, what happened? Where did price end up going, while I'm asleep? I told you guys that London session is the London session and New York session are the best times to trade EUR USD. I am asleep during the London session, so I'm not looking to trade it. And realistically, you don't need to take a lot of trades. You need to be able to get at least one good trade a day. Sometimes you won't have a trade. Yesterday, we didn't have a trade we had a trade set up for the New York session. We wanted to see price pull up into this level and come back down and break this low. So what happened? Price pushed up to a 15-minute level of demand. You can't see it now, but it pushed up to the 15 level of demand, and then it formed a change of character within here on the smaller time frame. The 15-minute candle had closed bearish. Let's just go to 15-minute time frame so you can see it. So 15-minute level of demand from here to here. So a change of character anywhere from this to this is where you could potentially, and we talked about it going forward, is where we could take our entry, look to target these lows down here. Why was I looking for price to get up here? Because I wanted price to come to a premium zone. This is my premium zone. I wanted price to get up there. And if price got up here, then we would just sell on the first bearish candle that formed. So different from price coming to this 15-minute level of supply. And why should I have been okay with taking the trade here after we formed that change of character, is because this spike up was due to high volume news. Generally, when you get high volume news, like how we talked about today, you only get things like a retest play. You don't get that full push to that demand zone because there was so much volume and price is pushing down and it wants to do is correct correction and then continue to push down into the direction of the trend. This was the targeted profit. And so the trade we should have taken, we didn't take a trade because price didn't come to my premium zone, but the trade that we should have been in was after this 15-minute candle closed bearish. The 15-minute candle closed bearish, but before the 15-minute candle closed bearish, on the 1 minute time frame, we had a change of character. So let's go to it on the 1 minute. You can see that price pushed up, pushed down, pushed up, pushed down, broke through this low here. Price pushed back up. This is a liquidity grab. It basically formed a double top, even though it did push above this level here. This is a liquid grab in our high volume session. Plus, we don't want to take our entry until the 15-minute candle closes bearish, which was this was the last candle of the 15-minute candle. So you want to go ahead and potentially take your entry right there after that 15-minute closes bearish. And let's just say we didn't get that glorious, we didn't get the best entry. So conservatively, it would have been, let's just say on a conservative trade basis, let's say we got in here within some of that volume, my target was still down here. So we were looking at about a 1 to 3 risk to reward on that trade there. Being that we capitalized on it and executed on it properly, accordingly. What do we see happen? This was last night. So what did we see happen during the Asian session? I went ahead and took my profits at that 1-to-1 risk to reward. What happened? Price pushed down, nearly taking me out. It would have likely grabbed liquidity right below my stop loss area. And then where does it go immediately after that? To our final take profit. And I want you guys to know that every single take profit location that we've mentioned this week, despite the one trade that we took on Wednesday, which was going in the opposite direction of what we were supposed to, besides that, and we had reviewed it, we talked about it, and that trade, if we was in on the right direction, would have ran a 1 to 4 risk reward to the resistance level. But every single target profit that was mentioned this week, whether it was on stream or not, has been hit. Every single one of them had been hit. So these target levels, these areas of support and resistance where we target are high probability trade levels that you can see some type of reaction off of. Let's go through what was happening. You know, price began to do its ranging thing going into the morning. You see that liquidity push to the downside, high volume push to the downside following the EU news. The 15-minute candle just closed, so that means this 4-hour candle is just now starting. You can see the 4-hour candle closed bullish. So what is likely that we see throughout this session is that you start to get this 4-hour bullish feel of that wick there. And what would that be indicated by on the smaller time frame? So you can see we have our impulsive move. So we got an impulsive move here. And why is this an impulsive move? Because it's a high volume move. Then you start to get your corrective structure. Where are we retesting? We're retesting at that resistance level that we talked about. When you have high volume news, you get you generally get a retest play. So what would we need to see in order for price to push up in order to even take an entry? If we were looking to take an entry, had we not already taken one trade? Well, what I would be waiting for is a change of character. So price just tapped into this level here. Since it didn't tap into my demand zone, which would be lower way down here, we have to wait for a change of character. If it was in the demand zone, then you can buy off the first bullish candle, because this is the lowest point that price will likely go to continue in the direction of the trend. It's the start of the move that broke for the high that we were looking at. So you can see that that was the start of the move that broke for this high after rejecting off of that larger time frame demand zone. So this becomes our key low. But this, since we know we have a lot of high volume, this is our retest zone. The previous 4-hour closed bullish, with an immense wick to fill. We got a lot of volume. We need to see a change of character happen. So price is creating lower lows and lower highs. Lower lows, lower highs here. That's great, indicating a bearish structure. Price can still continue to go down. I need to see a change of character. So a breakout of these highs and lows, a corrective structure, and then that bullish candle there. Then you could take entries for price to continue pushing up. And note that the previous 4-hour closed bullish. with a lot of volume within the candle, it's likely that you can see this 4-hour candle continue pushing in that direction. And if we take a look here, it's looking like currently we haven't seen a change of character happen yet, because we want to see essentially this high get broken. Because that's our key high. So price came down, formed a low, lower high, lower low, lower high, lower low, lower high, came down, formed a lower low here. At this low, came back, retest. We can see that continuation down. If you get a breakup above this area here, corrective structure, and it likely will be a, some type of small retest. You can see this current 4-hour candle begin to fill the wick of the previous 4-hour candle in the direction of that potential trend. And if you don't get that change of character, then price can push bearish. Not necessarily likely, but plausible. That's why you have to wait for certain things to happen. And anytime that I would love to get an entry is anywhere. Well, I'm not going to say anywhere, but generally when this candle is bearish is where I would like to take entries if we do get moves, generally on our demand plays. So kind of like what we saw yesterday. Previous 4-hour candle. So this was the 4-hour candle. Okay, so this was the 4-hour candle that closed. This was the 4-hour candle that I was looking to trade. I got in at the bottom wick when that candle was bearish for price to continue pushing up, and I took profits within this area here. And then it pulled back down even steeper, and then pushed back up to the overall target profit area, which is where we was looking for price to go. So on the 1 minute time frame for EU, you can see that we are still creating lower lows and lower highs within this structure here. As long as this low down here, isn't broken, at any given point, we could start to see a change of character form. Now this becomes our change of character high. So you need to see this area get broken in order for price to continue pushing bullish for that plausible flip. And well, let's just put it back here. This is our retest level. So at any point after tapping into this level here, price can form that change of character. But you want to generally wait until price taps into that level. We took our entry following the volume, and sometimes you won't, when you have high volume news like today, you won't get that full retest. You'll just see price push down like this, and it can continue pushing long. We see that didn't happen with this. And you can see that price closed as a relatively weak bullish 4-hour candle. Though we had a lot of volume within the 4-hour candle, you can see that price closed bullish, but it closed as a small body. And that's just because we had such a great immense rejection off of this level. But if we go back to Friday from a couple weeks ago, is it right here? Yeah. So you can see we had a high volume news event during the New York session. Let's go to the bar replay. Let's go here. You can see you had a high volume news event happen. I believe it was like PMI or something like that. And then what do you see happen on the smaller time frame? Well, price pushes up with a lot of volume here. And even if you wait for the news to come out at 10 o'clock, you got a lot of volume. Boom, you start to push up. It forms a little corrective structure, continues pushing up. Pushes up, forms a little corrective structure, continues pushing up. So that's what we were anticipating, something similar to happen for NFP today. And then you would see something of this 4-hour candle closing as a strong bullish 4-hour candle. Instead, for today, we didn't quite get that, which two reasons. One is why I took my profit so early. We started to reject off of this level. If price would have pushed through this area here and started breaking this high, I wouldn't have closed my trade. We're going to let this thing play out until after we broke this high, because this was going to be our target profit level. After we broke this high, we wanted to see price, the first bearish 1 minute candle that closed after this, or after this high was broken. That's where I would have secure my profits there. Likely just the 90% since we had just got a new high created, and then let that 10% run to see how far it can go, because some days you have those continuations where price just runs long. You get that volume here, and if you, let's just say for instance, we were taking an entry within this 4-hour candle here, and price was running long. You get a slight retest, and then you see another wave up, a slight retest, continuation up, and you can just let that 10% that you hold be, like almost an investment, and over time it becomes, more and more, it will be grow to more and more, and then you would just trail your stop loss below the lows, and you can get out at a larger time frame key resistance, or like here, you got that 4-hour time frame resistance. Price started to break out of that level, then you got once it broke that level here, you got resistance up here. So this is some key resistance there that you start to see price flip off of, and you see it got close to that area, but it couldn't quite break that area once it got into that area. So just different things that you'll start to learn as we do more and more of these sessions. But essentially today we executed on the high volume continuation move. Was only able to secure the 1-to-1 because price started to reject off of this smaller, and I don't have the premium, so let me see actually if it'll let me. Yeah, so you got to get the premium to go down to seconds. But if we were able to dial down to, like, let's say the 1 second, you would see that price would have came to a key level of demand within this candle here, and it rejected off of it, which is a sign that price could potentially start to go to the downside, which is why I like to take my profits at these supply and demand zones, because that's generally where you'll get your resistance. Your trade can go from being so let's say we had a trade that was flowing in the right direction, right? It's almost like I'm not going to say 100%, but it's like a 95% chance that you go to the demand or supply zone in whatever direction that you're looking for price to go. Then from there, once you get to that demand zone, it's a 50-50 whether or not price is going to flip from this level. So we know that it's like 98% sure that you're going to get to that supply or demand zone, but it's 50-50 whether or not it's going to form a correction or a continuation. You get the break in a continuation. Why I like to take my profits is because if we hold in like today and we start to see, and you'll see the signs, price will start to reject, and you'll know that, okay, we're probably not going to get that continuation, because if price wanted to continue, it would have just, as this candle was closing bullish, it would have just broke. It wouldn't have even, showed any, bottom wick for real. It would have just broke and continued with the volume. So we went ahead and secured that trade. Same thing as the trade that we took last night. This was yesterday. Where was the trade I took last night? Right here. Why did I take profits at a 1-to-1 risk to reward? And some might not be okay with a 1-to-1 risk to reward. It is what it is. At the end of the day, my goal is not to make the highest risk to reward. My goal is to be able to swing a quick profit and go on about my day. And so what happened? Price came to this level here and it started rejecting. Once it started rejecting, it's like, oh no, I don't want to be in on that. I don't want to be in on that rejection, because price could likely flip. Now it did flip and formed a corrective structure. And yes, the larger time frame target eventually got hit, but it took so much longer. It wasn't until, I closed my trade at 9:20 here. It wasn't until, almost 2 hours later that price is hitting that full take profit. And then you have to sit through all of this drawdown to get, an extra half a pip in profit for that 1-to-2, or, an extra 1-to-1 risk to reward, whatever that. Well, actually my entry was here. So this was my entry. My stop loss was at 93. So you have to wait. I would get another additional position, but you can see with my stop loss I would have got stopped out before price pushed to that area. And realistically, understanding that we can get a rejection off of here, I don't want to go through this drawdown period of price pushing up, pushing down, pushing up. And it is signified within this wave here that price was creating lower lows and lower highs, because you can see we got to push up. Let me move this. We got to push up, a push down. A lower high created, a lower low created, a lower high created, a lower low created. So it's like, nah, I don't want to be in throughout all of that drawdown. Let me take my trade at a quick 15-minute trade, and I can go about my day. I was able to go and watch the football game. There was a first NFL season game between the Chiefs and the Ravens, and I was watching it, and I wanted to continue watching it and then go to bed, and so I could start my day today, wake up 4 a.m., go to the gym like we did. And end this week off strong. So I didn't want to be through all that drawdown, similar to the trade that we took today, and also in resemblance to the trade we took on Monday. When we took our Monday trade and we made a 1-2 risk to reward, what was happening? Well, where was we at? Right here. So it was this candle. Previous 4-hour candle closed bullish. We like, all right, bet. We're looking for buys. We're looking for our buys. You dial down to the smaller time frame here. You can see what happened on the smaller time frame. All right, bet. Boom. Let's go to 5 minute time frame. So what happened? We just got a bullish 4-hour candle close. So I'm looking for buys. What also happened here? We got a change of character. Price was created. We have an impulsive move. So our impulsive move, a corrective structure, and then another impulsive move. 4-hour candle closes bullish. We already know that we're anticipating price to continue in the direction of the trend. We have our impulsive move, corrective structure, and then what we have happen is a change of character with another impulsive move. So price pushes down, creating lower lows and lower highs. Yeah, very slow. Oh, sucks. My brother was able to get a position right here within this corrective structure, but with corrective structure trades, you have to take profit at that supply or demand zone, because at any given moment, price can continue in the direction of the trend. So there's two trades that we'll look to take. It'll either be a corrective structure trade or a continuation trade. So what we've seen happen is a continuation. Price closed bullish after breaking through these highs here. This is what I mentioned on EU that we would want to see in order to be able to take buys today. What did I look for? I wanted to see a correction to my premium zone. Where's my premium zone? This 5-minute demand candle. When price gets into this level, I want to take buys. So what happened? Price is chilling. We was on stream breaking down, and I had an alert set on Monday stream. You can go back to it. You can watch it. And I was telling everybody, when price gets to here, that's where we're going to take our entry. We got to push down. Stream ended. I'm like, all right. The stream had ended, and I was like, you know what? It's okay. I'll let you guys know if, I take this position when price starts to form our corrective structure. We started to see this move to the downside. I'm telling everybody, all right, we're nearing. I messaged the group. We're nearing this our entry location. I'll be taking buys from this level after the first bullish candle that we see form at this level. So we see price push down, boom, we tap into the level. Let's dial down to the 1 minute time frame. So on the one, oh man, where's the chart? There it is. Okay, there we go. So y'all can see this a little bit better. All right, so we just tapped into my key zone. The key zone is indicated by this blue box here. I went and took my entry after the first 1 minute candle was closing. And realistically, 20 seconds into this, or 20 seconds left into this 1 minute candle, is where I went ahead and took my entries. So I took my entry, but because of spreads, I got in at 1.10616 level. So slightly above the candle. I mean, at the time the candle was forming right here, the spreads got me in right there, whatever. I set my stops below this low here. And then we were looking for a target back of these highs up here, right? So that we're looking for about a 1-3 risk to reward trade. When I entered this trade, I told everybody to be aware of resistance at 1.1066. It was 1.10668 level. That was the level. So because we had resistance here and price could likely flip off this level. What did we start to see from that key demand zone? Price began to push bullish. Once we got up here, we got this bullish structure. Move stops to break even. Boom. Let's move stops to break even. Boom. Did it. It was great. We got a little rejection. Price continued to push up. I closed 90% of my position at the 1-2. So I closed 90% of my position at this 1-2 resistance here because I just didn't want to be in any drawdown. What happened? We started to see a corrective structure. You got a little bit of a steeper move up, but then we got a corrective structure to form. Remember, our overall target was at this level here. I closed 90% of my position, leaving that 10% to potentially run to our full target. Then what happened? Price pushed up, got near that level there. Once price got near that level and we started to reject, I'm like, okay, we could potentially see a flip from this level. I don't want to be in on that flip. Close the last portion of that trade. And it ended up being about a 1 to 2 risk reward that we got in total, a little over a 1 to 2 risk reward that we got in total for that trade there. So we keep going, and you can just see how price started to play out. You get that deep correction, which we don't like to be in for, and which is why I took my profits when I did. And then I don't really remember what happened after that, because after I took my profits, I went on about my day, started to create content. So let's do 10. Let's see. I believe it corrected all the way down and then pushed up to the target. Yeah, no, that's what happened. So price had pushed down and then it pushed all the way back up to the target. It was like at the start of the new daily that we was hitting take profit. My brother was in the trade and he closed his position right up here as soon as we hit that level. And then from that level, immediately we started to see rejection. Let's see. If I'm not mistaken, there you go. So there's that rejection that we started to see. And he was able to close his trade up here. He held through this drawdown period. So price pushed up, pushed down. He held through this drawdown period because he wasn't actively on the charts. And then once price got back up here, I was like, go ahead and close the trade. And so for me, it's worth it to just close here rather than wait through all of this drawdown for price to give me, 1 or 2 more pips. It's just not worth it in terms of the emotional stress that you go through. I like for price to just go right to my target. I don't want to deal with a whole bunch of up and down. And what happened? Price pushed up to this level here. It broke through this low, and after price had created, okay, so let me just continue to break this down. So after price had pushed up, price pushed up here, created this new higher low. It broke that high. I moved my stop loss for that last 10% below this low here. So what do we see happen? We, price began to slow up in this area, which was expected, and then we got to change the character form. Broke through this low. What happens after that? It's likely that you can see a corrective structure form, and where will we target on our change of character? Back down to the low. So that means that price could likely go back and break this low here. I don't want to be in through all of that drawdown, or to be near take profit, don't close, and then have to go through this whole drawdown just for 2 hours later to get, not even 2 hours. It was some time, but about 3 hours. So just for 3 hours later for us to get, an extra pip. What could you have been doing with your time within that 3 hours? It's just not worth it. So today we was able to get ourselves a quick trade, very, very quick trade. It doesn't look like, it wasn't the most glamorous trade. We got a quick 1-to-1. I was able to make about $1,000 on that trade, risking $1,000. So, but that's a good day. We made $500 yesterday, risking $500. I had to take at 1-to-1. Price ended up going to our full take profit, but it was okay because it went to our full take profit. 2 hours later, I was asleep by this point. And, so that's that. So for this week, we've had, so in total of trades this week, I've taken, I think, let's over here. 1, 2, 3, 4, 5, 6 trades. So we took 6 trades. We had 3 winners, 2 break evens, and 1 loss. And the one of our break evens that we had would have been a winner if we would have just waited for the news to release first. I got out. I mean, ended up being a break even trade, but on Tuesday, I think it was. It had to have been Tuesday. Yeah. So Tuesday, price was creating lower lows and lower highs, and just take my word for it. But this was our 5-minute. Okay, you don't have to take my word for it. I'm going to just do it because I'm going to stop being lazy. Not going to be lazy. Okay, so Price that came to this key level of demand, right? I wanted to see the first candle that closed bearish I was getting in at. So I took my entry, boom, set my stop loss above this high here and just wanted to target back down to this low here. Only thing is there was news coming out later. So once we got this volume to the downside, I moved stops to break even. Then news comes out, we get pushed up, we got a liquidity grab. What happens? What should I have done is I should have executed after following the first bearish candle because a larger time frame structure was bearish. And I mentioned on stream, as long as this area up here isn't broken, because that's our key. This was our key high. Price pushed down, had created a low, corrected, pushed down, broke through that low, corrected back up, and then broke through this low here. This becomes our key high. So as long as this wasn't broken, we were good. This was just the demand zone that we were currently in for the session that I wanted to execute on. Previous 4 hour, I believe, had closed bearish. So what I wanted to see, there's no way the previous 4 hour closed bearish, but I knew the larger time frame could reject off of that. So what I should have been in on was the first candle that closed after the news, the first bearish candle that closed after the news, for that same target profit to get hit. What did we see happen? Price came down to that level of demand. We talk about it all the time. It's like, what do you want? Do you want to get your profits at demand, or do you want to wait for the drawdown? Likely to still hit the target profit, but it's gonna come with some pullbacks, and potentially could pull back all the way to break even before hitting that target profit. It's not worth it for me, but this is the trade that I would have wanted to take and secured a 1 to 2 risk to reward. And even though my overall target, because this was a continuation of a larger time frame bearish move, a continuation trade, it's likely that you go ahead and break through that low there. But when price comes to the demand zone, and you can see it, I think, better on the 15 minute time frame. Yeah, there you go. That first bullish candle that started this bullish wave, when price comes to there, you immediately get a rejection and a correction, and then you see that continuation, and then you eventually get your 1 to 2.6 risk to reward. To me, I'd rather take the 1 to 2 real quick and then not have to worry about it. But this was a break-even trade, so wasn't able to secure out our full profit on that one. On Wednesday, we took our loss. Why did we take our loss? Because I was trading in the wrong direction. It didn't even abide by our system, and we lost less than what we anticipated, or than we anticipated in terms of I risked less than I thought I had risked. I wanted to take a $1,000 risk. I ended up only taking about $700. But what happened during the New York session? That 4 hour candle closed bullish. So what should we have been looking for? The bullish continuation. And if you take a look on the 5 minute time frame, there was a change of character that formed after this candle, because this 4 hour candle closed bullish, there was a change of character that formed. So on the 5 minute time frame, you can see the change of character that had formed. Let's go to it here. Boom. So price was in this bearish trend, creating lower lows and lower highs, and then we closed bullish, breaking a previous high. What do I want to see? I should look for a correction. You could either get a correction to your premium zone, or you get a continuation. I mean, in terms of or you can get a retest play and a continuation. So price ended up pushing, let's see how I did. I think that, yeah, this ended up being the entire bottom wick of that 4 hour candle, that next 4 hour candle. And then you just seen that continuation happen. So when price pushed down, pushed up, pushed back down, now we're creating a new high there. This becomes my key low in this smaller time frame structure. The first candle that closes bullish after tapping in to this level here is the entry that I want to take, or should have taken, shall I say. So let's refine it down to the 1 minute. Skadoosh. There. So the first bullish candle that taps into this level is where I should have taken the entry. That would have been this 5 minute candle here. So you take your entry, let's say after the 5 minute candle closes, and then resistant or stop loss is below this low here. Take profit is at resistance. So where's resistance at? Let's go to the 15 minute time frame. I think it was. Nope, couldn't have been a 15 minute. It had to have been like the 30. Nope, not 30. Okay, nope, it was 4 hour. So 4 hour resistance. Boom. Where's the first take profit level? Here. But how I execute and how I was telling you guys today is if we get what happened? this 1 hour candle close, and after this 1 hour candle close, immediately we bought all the way up. And I'm talking within 1 5-minute candle, we had got all of this crazy volume. What is this area here? That was our previous key high that we were looking at on the 4 hour time frame from the day before that. If price broke this level, then a change of character or on a larger time frame could begin. We could start to see price on the larger time frame continue to push up. And if you take a look here, price was creating lower lows and lower highs, created that low, that lower high, that lower low. This was our key low. This was our key high. Then price broke through that with that high volume news that had happened. So how I would have executed on that trade is, once we get high volume news, let that news rock. You don't got to take profits. It likely would have pushed up too fast anyway for me to be able to take profits within at that resistance level there. Let's go back to the 5 minutes so you can see it. So since it's pushing up with so much volume, we could potentially start to see a change of character happen. What I want to see is after my take profit, after my take profit level. So this was my initial take profit level. I want to close my position, since we got so much volume, after the first bearish candle to close. And once price broke through this high on the 4 hour time frame, it's likely that you can get a rejection. So once this started to show some signs of rejection, immediately getting out. Don't even want to stay through the full drawdown. Let's get out, because we already got more than what we anticipated for the trade anyway. But I'm not going to close a trade early here if we got so much volume. We're starting to see so much volume. I'm going to let that volume play out and just go until the volume dies out. When the volume dies out, let's go ahead and get out. As long as we reach our take profit zone, which is here, anywhere that first bearish candle that closed, even if price came up to here and then that candle closed bearish, I'm getting out. Just similar to what we kind of seen today on the trade that we took during the session, was that price that came to that level of resistance up here, and it's like, nah, this candle started to form bearish, and when it started to form bearish at this area, you already know that price is likely going to start to push down. So I'm like, nah, I don't want to deal with that drawdown. Let's go ahead and close at the 1-to-1 and call it a day. But we could potentially have seen a continuation play, and that could have ran long. So on a quick 3-minute trade, it wasn't a crazy trade, but we was able to make a quick 1-to-1 with that had an upside potential of running long. With that news, price can continue and run, what I'm saying, what was my stop loss in pips? Was it like 5 pips? Nah, I had a 10 pip. So I went conservative with a 10 pip. Yeah. And my entry was at, let's go back over here, 1.11327, 1.11327. So like right where we was at, realistically. And then a 10 pip Leon stop loss there. So we was able to secure a quick 1-to-1 and close that a little over I closed at about a 1-to-1 on the dot, that 90% of the trade, and let that 10% potentially run if it's going to run. And it could run long now. We could have seen this continue pushing up for a move similar to this, where price comes up to a larger time frame level of resistance, or you see that high get broken up here. Like price could have ran even to up here. We have a level of interest, essentially, where we would have likely wanted to take profit. But even at that, price goes for a 1-to-4 risk to reward, anticipating a 4-hour continuation play. Like the previous 4-hour had closed bullish, we want to see this 4-hour candle close bullish as well. And this 4-hour candle, though it's forming a steeper move to the downside, as long as it doesn't break this low here, price can still flip and close bullish, or it can close bearish here and the next 4-hour candle begin to continue in the direction of that trend, because it's all based on structure. This is our key demand zone. Price pushed up, broke for a high that broke the previous key high, rejected off of a demand zone for one. So we rejected off a demand zone, broke this high, created a new high, came back down. This is our key low. As long as this isn't broken, price is still in a bullish structure. Despite on the smaller time frame, we're seeing lower lows and lower highs get formed. If this right now goes and breaks this high and comes back down, we could see this continue pushing up. So it would be exactly the trade that we took on Monday. Price was forming lower lows and lower highs. Then we had, previous candle we already knew had closed bullish. So we were anticipating price to close bullish. And what had happened is we had a change of character. And then I told everybody I would look for a move back down to my key level of demand, because that will be my key level now that we formed a new high on the smaller time frame. And that first bearish candle or bullish candle that closed within this area, I'm looking to take positions. You could target that high there, or you can target a continuation to whatever that 4-hour high is up there. So, and those are high probability, high risk to reward setups right there. And so, not a bad day, not a bad session. We were able to secure a 1-to-1 risk to reward, made about $1,000 on the trade, and that'll likely be the last trade that I take for this week. So in total, like I said, 3 winning trades, 2 break evens, and 1 loss that could have been avoided. In total, I think the profit potential for this week was around 14K. If I execute perfectly. Oh, so there was 4 trades that I missed this week that all ran to take profit, or 3 trades that I missed. One was the trade yesterday that I hadn't taken. Let's see. I think it was right here. Yep. So yesterday, during the New York session, prior to that high volume that we had, let me see if I can pull it back to that area. It was Thursday, early bird. Okay, right here. Okay, so yeah. So price was where was it at? 6, 7. It was like 8 o'clock, I think. Oh, okay, yeah. I was looking at it on a 5-minute time frame. That's why I couldn't see it. I'm like, what is this structure? I don't recognize this. So, so what had happened? On the smaller time frame, we were relatively ranging. You know what I'm saying? We was relatively range bound. But what had happened was we had a high get broken. So we had this high up here break the previous high. What did I tell my brother I wanted to see? I told him, I was like, look, I want to see price push back into this demand zone. First bullish candle that pushed back into this demand zone, I'll take buys and look for price to target back up to this high up here, right? And sure enough, the entry, let me make sure that this is right. Yeah. So sure enough, the entry I think happened on a 1-minute time frame, and I'm looking at the structure. Like I'm watching this as it happened. The only reason why I didn't take the trade was simply because price the 4-hour candle hadn't closed yet, and I wanted to wait for the 4-hour candle to close to execute on a trade within that session on live. So, but what happened was we seen that demand zone get respected, wanting to take profits as this candle here is closing bullish. So you start to see this thing pushing up, it start to break that previous candle high. Go ahead and take the entry. So, oh, this is gold. This is why. Okay, hold on. That's why the structure looked the same though. I'm not gonna lie to you, but it was cleaner on EU. So I'm like, bruh, this ain't. I was wondering why it didn't look right. Hold on. It was the same structure as EU, but you could see the demand zone much clearer and the entry level much clearer. So you can see, all right, here. So this was the trade. So price had just pushed and broke the previous high. It came back. I wanted to see it come back down to my key level of demand. My key level of demand was this 5-minute candle here. Why this 5-minute candle? Because it was the start of the bullish push for price to continue, for price to break the previous high. Now, what did I want to do? I wanted to be in on the 1-minute time frame, and I wanted to take the first bullish candle that closed within this level. So let's refine it there. So this candle here. So this was our entry candle. Skadoosh. And then you set your stop loss below this low here. Skadoosh. I think it was like a 3-pip stop loss, roughly like a 4-pip stop loss. And then you go to target the high, which is up here. And so that was the trade that I had set up and said I was going to take and didn't take it. So this is a missed trade. There was Asian session Tuesday night. Wednesday night Asian session was trash. Wednesday Asian session, or Wednesday New York session, we actually took our L because we traded in the wrong direction of the trend. Tuesday was when we had Tuesday night missed trade. I think it was here. So this level here. So price had just closed bullish on the 4-hour time frame within this level, and we are at this resistance, and it might look choppy and sloppy, but you can see that price is still creating higher highs and higher lows. And also it had broke up here, created that high, and then pushed down to these level. It broke the previous high right there, pushed down to these levels. This becomes the key low. It didn't break that key low, and price was in that range bound area, but it had came down, and I was cooking at the time, so I seen it. I seen it late, essentially. On the 5-minute time frame, I can show you where I seen it at. So candle had pushed up, and it was pushed. This candle was already pushing up, but I wanted to take my entry here and set my stop loss below this low. That would have been the trade, and then looking for price to go to the 15-minute level of resistance was the target right there. So that was our target profit. And you know how I get with those Asian session trades. Once we get close to that area, and if price is showing signs of rejection, getting my tail out, getting my hind parts out of there. So price pushed up, you come to that resistance, like, all right, we good. Then it starts rejecting, and then it closes bullish. This candle comes up, starts rejecting. I'm getting out, and it's likely I would have got out like somewhere within this candle as it was forming bearish within there. So that's another trade, 1 to 2 5 risk to reward, and conservatively I was going to have a 3 pip stop loss. So it was a 1 to 2 to risk to reward trade. That would have been for that trade. Now, though I missed this entry and I don't like taking trades if I can't get the entry, because let's say I take this trade at this area here. Now my stop loss becomes bigger and my risk to reward is smaller, and I don't want that. I don't want a small risk to reward potential, because this is a less probability trade. You got to be watching it, and though it would have pushed up, consistently, I don't like doing that. So I was willing to let that go because the risk to reward that I wanted, I couldn't get. So price was in this area here, but I was able to break down the trade setup and idea to my girlfriend, that, hey, I missed this trade because, I wasn't on the charts, but it was my fault. I should have been on the charts at 9 o'clock. I was eating, and then I went to my room and then, grabbed my laptop, and price was up here. It is what it is. But essentially, that was another missed trade. And then I think there was one more missed trade. Oh, yesterday, the trade that we didn't take during the New York session because price was didn't reach our key zone. Yeah, up here. So price had closed. Did it close bearish? Yeah, it had closed bearish. So it closed bearish right here. So we had this move to the downside, and we had a change of character form. Price broke through that key low that I was looking to take my buy position for that targeted profit up there. So when it broke through this low, I told everybody, look, and I was upset that I was upset at myself that I didn't take that after I had said I was going to take that trade. But I told everybody on stream that I'm only going to execute if price comes to my premium zone. Now, price didn't come to my premium zone, but it did go to the 15-minute time frame demand zone, and then within here on the 1-minute time frame formed a change of character. And if you look at it on the 15-minute time frame, the 15-minute candle had closed bearish. So this 15-minute candle closed bearish. That's when I should have taken my entry after that change of character, and this 15-minute time frame closed bearish, looking to target back down to the low. Why am I targeting this low? Because we just formed a change of character, and it's likely that price can form a steeper move down and break that low. So we're talking, I had 6 trades taken on the week. 3 were winners, 2 were break evens. and one was a L, but I also had 3 missed trades that I wasn't able to capitalize on this week. So we're talking in terms of a perfect execution. I think we would be somewhere upwards of 15,000, being that we take every trade at, $1,000 risk. It would have been somewhere around there. But yesterday's trade was taken at a 0.5. So let's just say conservatively at $750 risk, which is like $1,000 is 0.5% of this 200K account. So we're talking like a 0.3 something, I guess you could say 0.35, whatever the case may be. It's not really important. But let's say on a conservative basis, a purely, dime piece executed week, we make around $10,000. We don't take the L. Where one of the trades, the trade that we took the break even, end up being a winner if we wait for the news. And then the 3 trades that we missed, it would be around a $10,000 profit on the week. And that's if we perfect execution, and we strive for perfect execution. Though we're humans, we make mistakes. So, but on the week, we still ended up with a $2,000 profit, which isn't bad in considering to how much, we risk. And so risk to reward was consistent of about a 1 to 1.7, 1 to 2 risk to reward, because my first trade was a 1 to 2 risk to reward. Second trade that we won was a 1 to 1 risk to reward, and then we had the break evens, and then another 1 to 1. So let's just say a 1 to 1.5 risk to reward is my average, probably slightly less than that. But and that's just because those quick take profits. If we have the perfect execution on all the other trades, we get a 1 to 4 on the trade that we had the wrong direction on. We get a 1 to 2 on the trades, 2 1 to 2s on the trades missed. And then like another, I think it was like a 1 to 3 on the trade that we missed yesterday, or this would have been likely like a 1 to 4. So, you're talking an average about a 1 to 2 risk to reward for every trade that should have been executed this week. And that will give us around that, that $10,000 profit, or upwards of like 14, 15 at the max, being that we take every trade at, $1,000 risk. So not a bad week. So, okay, check it. Let's look at what's going on here. Now, we're starting to see rejection. We just got that key Logan broken for EUR USD. What will we look for here if I was looking to take a trade? I want to see a corrective structure back up and a continuation to target whatever the low is where we start our corrective structure at. Not looking to execute on a trade. We took our trade of the day. One and done is how I like to do it. Because, it's $1,000 in a single day is not bad. And that's on the lower end scale. If this trade runs long, then, and price just continues with that volume, then you start to see, we could have made some pretty hefty profits following that volume from the news. But we didn't get that and was just able to secure our 1 to 1 because price and structure didn't show that price wanted to continue pushing up. So we closed at a 1 to 1 and ended up with a profitable trade here on the live stream. So this is that's pretty much it in terms of stream for today. Oh, we started the stream at 8:30, so I was about to say closing it a little early, but this is about an hour 30 of stream time. We were able to, execute on that move. We had a positive week, ended up with about $2,000 profit on the week, and we will, look to continue executing next week. We'll reevaluate the structure and we'll come back, Monday of next week and we'll be on it. Sunday of next week, I'll be sending out the trade setup and ideas to the group, and then we'll go from there. So hope you guys have gotten some value out of this. Maybe you were able to take that trade, but it's, it happens so fast. The live sessions aren't for everybody to be able to execute on the trade that I take. It's more so that you can start to identify why I'm executing on the trade that I take, so that you can replicate that for yourself and don't need me to be able to trade. You can just trade completely on your own because you'll be able to see these same things that I see. So yeah, not a bad week. $2,000 profit on the week. Roughly, in terms of potential, we could have done a little bit better. So it wasn't a bad week, but it wasn't a perfect week either. It wasn't a perfect week. And going forward, some lessons that I'll take from this week is, one, always trade in the direction of whatever, that 4-hour candle closes in our session time. That was why we took the loss. We was trying to trade in the opposite direction of where the candle closed. My fault. That's on me. It could have been avoided, and we could have been in on the right direction, which would have given us a 1-to-4 risk reward on that trade. So we take a loss in an area where we're not supposed to take a loss. And then our break-even trade, we had the one break-even trade, should have waited for that news to be released, similar to what we did today. And then we would have secured a 1-to-2.5 risk reward on that trade, instead of being break-even. And then, the 3 trades missed, the one trade of not just not executing, purely not executing. And then 2 trades, one trade didn't identify the change of character at the supply zone, and then the other trade simply just wasn't on the charts at the time that the entry was supposed to happen. So little things going forward into the next week. We're going to be on the charts for every session. For every session, we're not going to miss any trades next week, and we're also going to trade into the direction of whatever our session is saying the direction is. We're going to trade that, and then we'll just build off of that. So those are the only 2 things that I would say this week that we could improve on, that could have had, in terms of monetary value, could have had a drastic change on the amount of profits we made this week. Upwards of, like I said, executing that perfect potential, we're looking at about $15,000 on the week. Maybe even a little bit more, but conservatively $15,000. But $2,000 profit, not bad. Not bad. So I will see you guys next week on Monday. We will be back at it, and we're gonna execute. We're gonna tap in. I'm gonna take little Kilo Man out, let him go play, because he didn't get to play this morning. We had to come because NFP was coming. So normally we'll hop on and stream at 9, but since NFP was dropping at 8:30, we tried to get on a little bit early, so he wasn't able to really play at the park like he wanted to, and he's over here all sad looking. So I'm gonna go ahead and take him to the park, and I hope you guys have a great rest of your day, a great weekend, and that you're ready to go at the start of next weekend. We're gonna go ahead and get active, and I'll see you then. So appreciate everybody who tapped in. Hopefully you got some value out of this session. You was able to learn something from this session, and I will see you guys later.